Hey, good afternoon, fam. Good afternoon. Happy Sunday to everybody. Happy Sunday to everybody. So today's topic is based on a conversation I had with a young lady. She saw one of my video a while back. So pretty much me having a conversation with her. She saw one of my video I had a while back, and somebody was talking to her about why she doesn't have insurance outside of work and things like that. So either way, the topic for today is how much life insurance do I actually need, right? And in speaking with her, she does have, I believe, 180 some thousand at the job, and then she has an additional, I believe, like 120,000 through her auto insurance carrier. I guess they give her a deal when you have everything in one package or whatever, supposedly. Okay. So I went over with her, right, to to show exactly how much coverage that she has. So she's about 36 years old, make pretty good money, make about 9 grand a year. Okay. Single mom, 3 kids. She's also a homeowner, right? And I had to tell her, well, one, the job insurance you really can't count on, because whether you quit your job or your job quit you, you can't take it with you. That's number one. Number two, being the fact that you are a homeowner, you also have 3 children, okay, you are highly underinsured. And that's what we're going to talk about today, right? There is an equation or formula, right, that we use to calculate how much insurance an individual needs, right? In our industry, that equation is called DIME, DIME, right? I'll put it up here for you guys. DIME, right? The D stands for debt. Whatever debt that you have, you got to factor in there, because a lot of you be surprised when you pass away, your debt is still owed. The only thing that's probably forgiven is school loans. So upon death, school loan is forgiven. Everything else is still up for collection. Okay. The I stands for income, and this is important because most people don't know. Especially if I use a young lady, her youngest child, I believe, is 6 years old. Uh, you want to have 10 times your income when you're factoring your insurance amount need. Okay. Number three is mortgage. Let me tell you guys something. The mortgage company or the banks have insurance on their mortgage. In case you pass, they're free and clear. You should have the same thing too. In case you pass, that mortgage can be paid off, and your children or your spouse or whoever you're gonna leave the property to can still have a home. And I'm gonna share with you how I explained to this young lady, why she needs to understand this. Number four is education. You gotta factor that in. So God forbid something happens to you sooner than later, right? You want to make sure, if you desire for your children to go to school, you want to make sure that your dreams and goals for them still comes to fruition. Okay, even though you're not here. Okay, and so for example, if let's say your total debt is, let's use 20,000 when you pass away. Let's say your income, let's use her, she make about 90 grand a year. So really 90 times 10 is $900,000 go in here. I believe her mortgage was about 316,000 that she owed. And then 3 children, let's use an in-state college. So I'm over here in Maryland. Let's use about 15 grand a year. That's about 60. So that's 180 for 3 children. So $180,000 goes right here. Right? This total number here is actually how much insurance this young lady is going to need, right? And when I tally this up, it comes out to $1.1 million is how much she actually needs in total coverage. $1.1 million, give or take, is how much she needs in total coverage. So right now she has about $300,000. The 180 something at the job and the 120 something, at work. I mean, through an auto insurance company, life insurance through them, right? Now, this is a problem because I asked her, knowing this now, I asked her, if you pass away, who is going to be the caretaker for your children? She said, my sister. Great. Does your sister have her own children? She said, yes. I said, how many? She says 2. No problem. I said, well, does your sister have her own home? Or she's renting? She said, no, she has her own home. Okay, great. Now, how much did your sister make? She said, oh, she make about 70, somewhere around there. So her sister make a little bit less than her. So I asked her, hey, listen, if something happens to you, do you think that if you were to leave your sister $300K cash for 3 children, right, and a mortgage balance of $316,000, right, mortgage, do you think your sister can still keep that house and her house and take care of your children? Light bulb went off. She said, oh my God, I didn't even think about that. Because the reason why you buy a home is to put a roof over your head, but also to build an asset and create wealth. And you obviously don't want that to go away because you pass away, because the reason why you have assets and build wealth is to transfer it to, your children or your family or whoever, right? So these are things that people do not consider. And that's why a lot of people are highly, highly, highly underinsured. So technically speaking, she really only has of a true value $120,000, because the job insurance you can't count on, because once you leave that job, you cannot take it with you. So she's really walking around highly underinsured. And that was a conversation that me and her have, right? And we're going over numbers now and how to put things together and in play for her, okay? So listen, I hope that helps somebody today. I hope this helps somebody today. If you guys have any more questions, please feel free to give me a call. I mean to inbox me, message me. Some of you guys who are on here actually know me personally. If you don't have insurance with me, give me a buzz. Let's see what we can do to make sure that you're properly protected. Talk to you soon.